Good morning, everybody. It's Hari Swaminathan. Welcome to the free trading idea video. Today is Jan 22nd. It's Thursday morning around 7 a.m., just a little before 7 a.m. So, what I'm looking at here is the SPX. So, we saw a pretty big drop in the beginning of December, and then we saw a similar one in Jan, and you can see it sort of made a double bottom here. And over the last 3 days, the market has been somewhat stabilized and it's going up. Futures are just up mildly. The interesting thing is, if you look at the VIX is at 1885, 19. It did in the beginning of December, it did go up to 25. Even now, it went up to 23 and it's come down to 18. Now, if you look at the VIX, generally when you see this kind of stability happening in the market, where there was a downtrend and then it comes back, you'll generally see the VIX fall back down to the 14, 13, maybe even the 12 levels. So, that's when there's nothing going on, the VIX is somewhere in the low teens, perhaps no more than 15. So you're going to see this, VIX fall by about 4 or 5 points if this thing looks stabilized. And so, what is a good trade that we can do at this time? So what I have here is a simple S&P bull put. So if you look at the bull put here, it's 1950, 1940. This is the Feb series. So the Feb series has 28 days left to go. And you can come to about 1950, 1940, and if you look at the risk profile, this is a decent trade. You're getting about 1650 in credit, and the margin required is 8,300. So about 20% return on this trade, as long as the S&P doesn't fall all the way down to 1950 or 1948, which is where the break even is. Over the next 28 days, the likelihood of it falling all the way back here is obviously low. And of course, if it does start falling, then we have to take some adjustment mechanisms. But over the next 28 days, there's a good opportunity, especially because the VIX is going to come down by about 4 or 5 points. If this market stays right here, or even just slowly grinds up, the VIX is going to fall back to about 13 or 14. So that itself will give a little bit of a boost here. You can see the Vega is negative. So as long as the VIX is falling, this trade will benefit from that. And you're going to get the time decay because it's a bull put spread, and we're going to get time decay. So that's a general trading idea. If you see the VIX high up at the low 20s, then obviously you have to be concerned as to why the VIX is so high. But once you look at the charts and you see some stability coming in, that is a good time to take advantage of a higher VIX. Thanks.